Director at Prime Securities. Jayakumar, good to have you with us here. Good afternoon. Thank you for your time.
Good afternoon.
So we're wrapping up 2024, Jakes. We're looking into 25. So give us ideas how to make money in 25, the big money-making ideas as you look into the next year.
Well, I'm not sure about big or small. I mean, that time will tell us. But essentially, I think the markets have done extremely well in terms of a correction in the way that it's played out over the last 2-3 months. And I think it's shaken out a lot of people. It's shaken off, some of the really sort of hardened veterans, if you will, to believing that we've made a top and now, this is going to be a top for some length of time, etc. So a lot of people got shaken up, and I think public in general has been quite skittish. All of this, which has essentially convinced me that around the 200-day moving average, we made a very strong bottom. And given the way the markets bounced off that, covered virtually 50% of the losses from the 26,000 plus levels that it had visited. My own sense is that we could be looking at new highs as early as second, third week January. I think a lot has played out. We are seeing, interest rates to the extent that they will get cut maybe a month, 2 months down the line. I think maybe the change of guard at the central bank could mean that interest rate cuts may be more forthcoming than otherwise. The increase in or the reduction in CRR would help with liquidity. I think that will have its pervading impact in the economy, and the government spending, which has been so far a bit of an issue. We've had the lowest government spending in approximately 13 years. That, to my mind, will gather pace quite dramatically. So all in all, I'm quite optimistic, and it wouldn't surprise me to see a new high second, third week January as I sort of crystal ball into the next few weeks.
Jakes, hi, afternoon. Reema here. Are you still bullish on PSUBanks, or do you think the stupendous rally that we've seen over the last 2 years is now all the good news is in the price, perhaps, and from here on it may not be the kind of outperformer as it was?
More bullish right now on private sector banks, especially those that have got beaten down on one pretext or the other, notably this MFI. Now it's interesting to note that some of the MFI banks in general are quoting at 2 times book, while some of the private sector banks, which have been, in a sense, which have between 7, 8, 9% of their exposure in the MFI space, they have got hit in some cases to below book and in other cases to close to book. So private sector bank valuations, I think, will catch up. I think that's where the reversion to mean will happen. And the principal reason that guides me to this kind of thinking is that we have probably, as I mentioned in the earlier question, that fair amount of government spending left to be done for the end of the year. And when that sort of moves into the economy and there is velocity of money in the rural space, the MFI stress will come off, and especially banks that have been inordinately beaten down as a result of this MFI exposure or credit card exposure could actually face a fair amount of springback. And I think it's, in a country like India with banking licenses now being almost, no new licenses to be given, and we have only a finite number of banks, the disparity in valuation sometimes that gets set in as a result of 1 or 2 factors that could be seasonal or transient. That gives you the opportunity to buy into. So I think private sector banks for me are far more attractive as a group, and I don't want to talk specific stocks, than public sector banks for the moment.
Okay, hi Jakes, good afternoon and good to see you in. I'll ask you about metals in a bit, but what about FMCG? Godrej Consumer out of nowhere, they have come ahead of the end of the quarter and warned that things are not as rosy as it seemed, and HUL as well as Colgate in their investor calls as well, they stopped short of saying that there is a recovery underway. What's your view on these FMCG names? Because, the index is closer to the highs, but you have some of these frontline names that are down 20, 25, 30%.
And for good reason. Their growth has been limited. Valuation multiples have been excessive. And a lot of, in a sense, the FMCG space exposure has come through the new age companies. I haven't been, in all fairness, a great, for the last several interviews of yours over the last maybe 3-4 years, not been a great fan of the FMCG space. I've been happy, to miss it as 60p stocks move to 80p stocks with 5% growth rates. And if that kind of thing prevails, clearly at some point in time, the cookie had to crumble, the chicken had to come home to roost, as it were. So I think they have come. These could go through long periods of consolidation. People are reluctant selling these companies. The inorganic growth is not there. Organic growth is limited. Pricing pressures are there. And the new age companies are willing to burn money in order to gain market share. And they're also burning capital in order to bring down prices. So I can't see either pricing power or, in any case, consumption as a theme was limited. So for me, the FMCG will happy avoid, and I'll continue to be there. If I have to play that space, it'll be through some of the new age companies, and that's probably the way to do it as well.
Yeah, the new age companies, they've been definitely catching the market's attention, right? With the Zomato and then now Swiggy making waves. Jake, it's great to have you on this afternoon. Good chat as always. I just want to go to pharma, which is a space that you've liked for a while. And it's in the headlines for not so great reasons right now. I mean, at least this week, it's been all about the US Biosecure Act and whether it'll get passed and whether the legal legislation sort of moves forward or not. So there's been some worry around it. Your thoughts on whether it is the CDMO space that you're more optimistic on, and what happens if indeed this Biosecure Act doesn't go as per plan, which means that it's not advantage India over China?
No, I don't think you can conclude that. It may not be advantage India over China in a short tactical, should I say, CDMO space. But I think what can't be taken away is the fact that the generics pharma space is continuing to do extremely well. The generics pharma space is offering substantially lower prices for the same products, which I think anybody in the sort of helm in the US will go for. So I don't think that has changed. There have been some pockets which they have said has some pricing pressures where there are more than one player. But in general, I think that's a secular theme that will continue. So in the pharma space, I kind of like some of the PLI players, who are manufacturing here as import substitution kicks in, and the generic space. And where there's a combination of both these, I think it offers a great opportunity to buy into. Some of these stocks have come off from their recent highs, and therefore I think they offer margin of safety as well. And there are still stocks in the space going at sub 12 to 13 EV/EBITDA multiples, and I think that's fair for companies that are in the which are producing over 5,000 to 6,000 crores of EBITDA, and there are companies producing even higher than that, going at best low double-digit EBITDA multiples, and I think they offer great opportunity. The risk is where people get carried away in a theme like the CDMO theme and buy into assuming growth over the next several years when the production itself has not begun or kicked in. That's where the risk is. And wherever there is euphoria, I mean, we've seen this is not just banking, not just pharma, but corrections happen pretty brutally when people are well committed. So given that, my own sort of sense is there are still pockets in the pharma space that offer a lot of value. 1, 2, 3 companies I can talk about, which are, not on the channel, but which we as a house or me as an individual keep track of as opportunities to buy into.
Okay, all right, got that. Well, thanks a lot, Jakes, for joining in, giving us your view on all those sectors that we discussed, from banks to FMCG to the farm.